welcome to Financial Brew. My name is Candace. I will be your guide as we take one more trip into the financial verse. When we start to look at the world of investing, the first thing we're going to notice, especially if you're brand new, is that there's a lot of moving parts. There's a lot of complexities to investing, and it's very easy to become overwhelmed, and there's nothing wrong with that. That's perfectly fine. What I like to do is I like to first of all try to figure out what is my end goal, because the end goal is going to determine which path perhaps is the best one for me to take to get there. Now, a lot of people might be saying, oh, well, my end goal is I want money. Well, sure, we all want money. That's normal. But how do you want that money? Are you looking to build a big passive income so that in retirement you really don't have to worry about your expenses? You've got tons of money just flowing in and in and in. Or are you hoping to just make a really big purchase in the future, so you want to try to turn around and flip some money as fast as possible? All of these different factors are going to determine the method that you use, the approach that you use to investing. So, without any further ado, let's first look at the 5 methods. So what we're going to be looking at is we're going to be looking at dividend investing, growth investing, a hybrid of both dividend and growth sort of mixed together into one, and swing trading, and we're also going to touch a little bit on day trading. We're not really going to get into options and futures, margin calls, all of that. That'll be a little bit further down the road. But for now, we're going to just hit the basics and bring you up to speed. Dividend investing. Definitely my favorite, and I would have to say that most of the stocks that I do hold are dividend stocks. Now, the way dividend investing works is you're purchasing stocks from companies who provide a dividend. A dividend is basically a small payment that the company will give you either monthly or quarterly in exchange for holding their stock. It's kind of like a thank you. Now, keep in mind, not all companies will provide dividends. Some companies who are strongly focused on growth, they will tend to take all of the money, incoming money, revenue and such, and invest it right back into themselves to power that growth. And we're going to talk a little bit more about them in just a couple of seconds. But with the dividend stocks, one of the things that's nice about dividend stocks is that you don't have to obsess the way you do with other stocks as to where the price is going, because a lot of times the dividend will stay the same. You still need to keep up on the company's technicals, but you don't have to watch daily, because if the stock is down a little bit or up a little bit, it's not really going to impact that passive income stream. So that makes them a little bit more hands-off, which of course makes it even more of a passive stream, which is pretty awesome. So that's your dividend stocks. They are super safe, super easy, and who doesn't like passive income, right? Okay, that brings us to growth stocks. So with growth stocks, you're looking for companies who are not really paying out your dividends, but they are putting all that money back into them. They're highly focused on growth. Now, how you make your money on a growth stock is that as the company grows, so does the price of the stock. The stock can actually move considerable depending on the company. So it isn't as hands-off as dividend investing is, because you're definitely paying attention, because you want to, in some cases, you want to make sure your money is in the right companies. You want to make sure that the companies are growing. And a lot of times if a company is just not growing, you may want to even consider moving some of that money from one company to one that is growing so that you can maximize the profits, because that's what it's all about, is maximizing that profit in the end. So growth stocks, they tend to be a little bit more volatile, meaning that they will move up and down a little more than, say, a blue chip dividend stock. So some people love growth investing, and the younger you are, the better of a tool it is for you. And we're going to touch on that in just a little bit. So that is, in a nutshell, growth investing. So you're buying those growing stocks and hoping they take you up nice and high. Now, in most cases, people are going to find that they're going to have growth stocks and they're going to have dividend stocks. So they're going to have a hybrid of the two. And that is absolutely 100% normal. If you think of it, it's almost like a spectrum in a way. At the young end of the spectrum, the brand new investors in their 20s, they got lots of time. They're going to be just taking out them growth stocks. They're going to be trying to pull off the returns that they want, because they have times that if something goes wrong in the market, they have lots of time to recover. At the other end of the spectrum, towards retirement, the older investors are going to be a little bit more leery about growth stocks, because if something does go wrong in the market, they don't have time to recover. And that could hurt their retirement plans. But dividend stocks, being so much more stable, are a much smarter choice for the older investor. And then everybody in between is going to have a mixture. And it's not, I don't want to make it sound like if you're 20, you shouldn't have any dividend stocks. If you like the passive income, I almost said passive, I don't even think that's a word, but if you like the passive income, totally make sure that you got a few dividend stocks in there. So it doesn't hurt to slowly be building those up, but don't shy away from the growth stocks either, because there's a lot of potential there for you to make a lot of money, which is awesomeness. So that leaves us with swing trading and day trading. So swing trading, it's all based on buy low, sell high. So what you're looking to do is you're looking at stocks and you're trying to identify and find stocks that you feel are going to go up in value fairly quickly. So how would you do that? Let's say, for example, an earnings report was due out on a company, and all of the news says that earning report is going to be fantastic. The price on that stock is going to go up. So you would buy that stock, wait for the earnings report, sell the stock, make some money. That's how it works. So you're moving things on shorter time scales, and you're moving things fairly quickly, and you're making money. Now, the danger with swing trading is if you make a bad call. If you were to buy that stock and all of the rumors about the earnings report were absolutely wrong, and instead of making $50 billion, the company lost $50 billion, well, that stock is probably going to tank, and it may tank your profits with you. You may get stuck with that stock unless you're willing to realize the loss. It happens. Sometimes you end up getting a bad stock that sits in your portfolio for months or years. If you're like me, I don't like to sell something if it's not in profit. So there's exceptions to that, though. I mean, obviously, if I find that the company is absolutely, completely tanking and is probably going out of business, I'm not going to go down with them. I'll sell at that point for sure. Okay, so that is swing trading. The next thing is day trading. So with day trading, that is risky as all risky can get. It is not a strategy for the faint at heart. In a nutshell, it's very much like swing trading, but you're doing the entire thing in a day. So you're looking for a volatile stock that's going up and down, and you're buying when it's down, you're selling when it's up. You may buy again when it's down, you may sell again when it's up, or you may switch to another one. You're moving around, you're making investment upon investment, and you're selling. So you're basically moving things quickly, trying to make money. It is insanely dangerous, because for all you know, on that little dip, it might be just the beginning, and it might be going to dip a bit further. So you can easily lose a lot of money doing this, and a lot of people do. It's not an easy type of investment strategy. In fact, most people who day trade lose it all. That's just the reality of it. Now, there are day traders out there that make massive fortunes, and if you were to ask them, what happened the first time you day traded? They're probably going to say, I lost everything. I came back and I lost everything again. And I came back and first month I lost everything every single day. But I learned, and then they became good. And some people are good at it, but not very many. So it's highly, highly dangerous, and I definitely would recommend something that you stay clear of. If you really have to do it, make sure whatever money that you decide to play with is money you can afford to lose, because you're probably going to lose it. Anyway, that's day trading. Once again, stay away from it if you can. Okay. Oh dear. Well, as you can see, there's definitely a lot of different ways that you can begin your investment journey. With that said, all of the different methods that I have discussed in this video, from dividend investing all the way down to day trading, we're going to touch a lot more on them in future videos. So when you are down below clicking on like, be sure to click subscribe, hit the notification bell, that way there you know when I put up one of those videos. Another interesting thing, Wednesday night, the 20th of October, I am going to be live on Crypto Night in Canada. So that's the Tim and Nancy Danter. There's a link to their channel down below. Just go over, throw them up a subscribe. Be back at 8 p.m. tomorrow night Eastern Standard Time. And check out the Danter's channel, and I will be there live. It should be funny. Between Tim's jokes and mine, it will definitely be funny. All right. Also below, I got all my affiliate links as well. So if you are starting your journey, our next video, we're going to actually do a video on Wealth Simple. So if you don't have Wealth Simple, grab it down below. When you do right now, you'll get a couple free shares. I also get some free shares because it's an affiliate link. If you are starting your crypto journey as well, we got our Shake Pay down there, and we've also got the EQ Bank. Sign up with EQ Bank, put in $100, and they'll give you $20 and me $20. It's free money. You can't disagree with that. If you haven't caught my last video about emergency funds, I'm going to throw the link for that right up there, because I think that's something you definitely want to check out as well if you haven't yet. Okay, so without any further ado, I think we're gonna end it here. Thank you for coming along and visiting with me in the financial verse. And until next time, take care.